Welcome to our fourth client Cloud Business Quarterly Performance Review webcast outlining the recent results of the Cloud Public Market Landscape Report. I'm Allan Crawford, and I will be your host for today's webinar. Over the past year, we have engaged with our readers through our quarterly webinars to provide you with additional insight into the state of the cloud market and vendor performance. We've had good questions and discussions with you, and we're excited to continue to connect with you as the TBR Cloud practice grows. Before I pass this over to Jillian and Allan, there are a few logistics I'd like to cover. First, we'll be recording today's session and posting it to our YouTube channel, TBR channel. We need to visit our channel to watch this presentation or any of the others that we've posted. Second, we need to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function throughout the presentation. Allan and Jillian will address them at the end of the webinar. Or, if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to Jillian or Allan. Good, they're one person. At the end of the webinar with the CC to your executive to set up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the presentation. You can also find the slides as well as other thought leadership pieces, web decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. With that, let me introduce Jillian Mirandi and Allan Krans. Jill has been spearheading our public cloud research and is a lead author of this program. Allan has been covering and writing about the software market for over 7 years and is leading our research coverage in private hybrid cloud. Their strategic advice is helping several of the largest cloud vendors identify new opportunities and revenue streams. With that, let me hand this over to Allan.
Great. Thanks, and thanks everybody for joining us today. We're excited to share the insights from our most recent cloud market landscape, but wanted to take a minute to share our view of the cloud space and the offerings that we have across multiple different segments of what roll up under the overall cloud portfolio. We've taken in researching cloud and that we'll be building out further in 2013, really holistically at different segments of the market, maintaining our company-centric view on the business performance and strategies for vendors that are playing in this space. So the key components of the overall portfolio, first that we have quarterly cloud business reports. So those are company-centric, but they cover the entire landscape of cloud service delivery. We have pure play public cloud vendors in there. We have the broader multi-line traditional vendors where cloud is one part of the overall IT portfolio. We also have different service providers, both the telco service providers and the SI service providers, because we see them more and more as important players in terms of delivering across the spectrum of cloud offerings that are available to customers. On that vendor-centric view, we've put those companies into the broad spectrum of players in the space under the market landscapes that we have. So a lot of the highlights that we're covering today will come from our existing public cloud market landscape. As the market has progressed, we've seen the need to add a private cloud services market view as well, maintain a very similar approach, but looking at the different elements of private cloud infrastructure and as a service offerings, because we really see that's where the market is shifting, and we want to take that same vendor view in the private cloud space. Support of our analyses in these offerings, maintaining these cloud market models that segment the market, take that overall holistic view that accounts for the diversity of players that we're covering. Look at it from the public and private cloud segments where we have a lot of existing vendor coverage. I'd also build our services coverage and look at the cloud professional services and leverage our hardware and infrastructure research to look at the cloud components. There's more and more we see both from the customer view and from the vendor view here. It's cloud across the spectrum of delivery and flavor options. That's how customers are thinking about it. And more, that's where we see the offerings that we're covering for our vendors, not being so siloed into the individual components of cloud, more looking at the overall benefits and attributes of cloud, regardless of where, how, or the specifics of those actual delivery options. So new things that we're adding in 2013, number of vendor reports that we're going to be coming out with. Those same vendors, you can see they cross the different player types that we see within the cloud space. So those will be integrated into the vendor reports, but also added to the market landscapes as well to build out the number of companies we're covering there, and to add to the overall level of analysis we can get to by just having a more diverse set of players in the space to look at both the financial performance, also those company trends and strategies that we see coming out, and that'll be on a quarterly basis. So listing additions in 2013, happy to share more as those get rolled out. We'll be initiating coverage on a number of vendors in the first quarter. So within the next month, we will have more vendor perspective there that can be shared with you all, both through these and the individual vendor reports. Background in place, I'll hand it over to Jill to dive into the quarterly review of what happened in the public cloud market landscape, and what some of the impacts we see for both participants and the overall industry as a result. Jill?
Thank you, Allan, and thank you everyone for joining us today. Salesforce.com, created in 1999 by ex-Oracle exec Mark Benioff. After just its first year in the market, the company generated around $5.5 million of 1,500 customers. Later, by 2004, Salesforce went public. It generated $176 million for the year across 1,400 customers, marking over an 800% customer growth and 3,000% revenue growth. In 2012, which ends at the end of the month for Salesforce, the company will generate an estimated $3 billion across around 120,000 customers, and has really sustained its position as the largest B2B cloud company on the planet. Although we do see competitors creep in from the traditional side and the pure play side, and a few flaws in their business model, I believe that Salesforce is here to stay and will continue growing at a fast clip of 30% year to year in the coming years. The IPO was seen as a test of a new business model that had the potential to reshape the software and larger IT industry. A successful IPO, competitors such as SAP and Oracle, among many others, really see too much of a threat from Salesforce, and probably thought the company would announce an on-premise support and a bigger supported professional services. Also prior to the Siebel and PeopleSoft acquisitions. Success at Salesforce.com really reignited the tech industry after the IPO, or after the birth of the internet bubble. It did pose the next question: is cloud computing the next big bubble? For a few years, we've discussed the emergence of cloud, the benefits of cloud, the steadily increasing demand, and the slow then rapid pace of entrance across backgrounds and the market. This presentation will be a bit different, as we believe cloud has really hit a turning point and that the business model is beginning to mature. Showing the model is starting to mature is that the space is really transitioning from a technology-driven market to a business-driven market. Turning point as evidenced by three main areas that came out of both the public cloud market landscape that Allan highlighted, which covers 7 of the top public cloud vendors, accounting for around 50% of the total public cloud market, as well as our 9 cloud business quarterly reports, which are vendors' entire cloud businesses, including public cloud, private cloud, and cloud professional services. The three main things that came out were, one, portfolio expansion. So companies expand outside of their core portfolio into new functional areas and new vertical areas. The cloud-enabled data center expansion. So initially, companies offered cloud services mainly in the U.S. and Western Europe, so the very mature markets. With the maturity of cloud happening, we see these vendors now expanding into growth regions such as Latin America and APAC. The emergence of open standards. So as companies adopt cloud from the vast amount of players, open source is really becoming a standard in today's market. So this is the first topic, again, portfolio expansion across vertical and functional areas. So orient you to this chart. The x-axis is year-to-year public cloud growth in terms of absolute dollars. X-axis is year-to-year public cloud growth in terms of percentage growth. This bubble represents the volume of public cloud revenue in the quarter, and so in this case, 3Q12. Getting into new functional areas include Salesforce, Workday, ServiceNow, and Amazon Web Services. The vendor that we highlight as making the biggest move vertically is Verizon. Sales.com, again, a definite market leader and market maker in the public cloud space, really had to begin to expanding outside of its core CRM portfolio, as cloud-based CRM is no longer a differentiator, as well as to cross-sell into their existing customer base. Over the course, Salesforce has announced and launched a marketing cloud, assists Buddy Media and Radian 6, a cloud, Work.com, generated from its acquisition of Ripple and partnership with Workday, and a content collaboration product, Chatterbox, that will be released in coming quarters. Now that these products will be successful in the market, especially in terms of cross-selling into the large CRM base, but we also see them directly competing with a lot of Salesforce's partners. So partnership with Workday and its partnership with Box will both eventually be threatened by these partnerships. So we think in the long run, Salesforce may face some problems in continuing to expand through partners acquisition. It just could start losing some momentum in the long run.
For Salesforce in particular and the other public cloud pure plays, we talk about the mention of the market and the shift from technology to business. Certainly, we see the expansion as through portfolio and technology, but definitely grounded in this strategy that says you can't be reliant on one offering for too long. In order to sustain an advantage in the market that Salesforce, as Jill has highlighted, has really built over the last decade, that there needs to be more ties into your customer accounts, that you need to have more touch points within those relationships, because to have competing offerings come in, your same advantage, which is to have a cloud approach, and then use that as a launching point for other areas, is too big of a competitive. So they need to expand both from an account perspective and from sustaining revenue growth perspective. And then eventually, I think that they would eventually look at a profitability perspective. We haven't seen that yet. It's still really a focus on getting account expansion, making sure they have firmer grips within those accounts so that they have the stability that offsets, one of the key defining features of cloud, which is customers can change their contracts very quickly, and you don't have that long-term relationship that's built into the traditional IT and software delivery. So those are important aspects of what is increasingly becoming more a business-based approach. It has been for the English vendors, but for Salesforce and Amazon, it's about staying ahead of new entrants in the market that have more resources. They really need to leverage their core advantage in the early mover markets, transition that so that they build around them and create some more of the competitive barriers, and seek out those new sources of revenue that allow them to continue expanding and to maintain the advantage that they've built within their respective markets.
The next slide is ServiceNow. Very disruptive in the IT service management space, but the cloud deployed model is no longer a differentiator, as major competitors HP, BMC, IBM have similar cloud deployed ITSM solutions at this point. So ServiceNow expanded outside of this area into HR, finance, and recently it will, or in coming months, it will release a platform as a service product. Again, to further get into accounts, to expand, and really to differentiate. Was an HM and ERP disruptor and has continuously added applications such as recruiting and big data and analytics for HR and finance to remain competitive as, again, more traditional vendors, SAP and Oracle, launch their own cloud-based solutions. And Amazon Web Services. So Amazon, similar to Salesforce, is a market maker and a market leader in the space, and will continue to be for the foreseeable future. So they really had to expand outside of their core compute and storage offerings to, again, spread out in customers, stay competitive, really have a more compelling value prop as competitors from the traditional side, so IBM, HP, Dell offer infrastructure as a service, as well as more pure plays such as GoGrid offers competing services. So it expanded into database, soft service such as simple email service, as a platform as a service space, Elastic Beanstalk. Most of the revenue is still coming from that core portfolio. We'll continue to go, but these are additional points of entry and areas to cross-sell into.
One thing to note about Amazon, we talked about the maturation of a business model. Their marketing strategy and how different it is compared with the traditional IT vendors that are entering the space. It's really not a paid advertising-led approach. Multiple different techniques, but the price changes, their ability to leverage portfolio additions and those price changes to get earned media coverage, and use the buzz and word of mouth and the IT media to get them more exposure without having to invest a lot in terms of traditional advertising methods, is something that we fits the cloud provider mold. It's something that we expect to see more of the traditional providers integrate as part of their strategies, because not only are the offerings different, a lot of the ways that you can generate marketing and awareness around them are different. So certainly we see Amazon as someone that is quite at using it. It does have a downside, however. You've seen a lot of coverage, in terms of outages and some of the downside of the model, so it does cut both ways, but it has been very successful in gaining them exposure, and also kind of fitting in with their overall corporate persona with the AWS offerings, targeting a very tech-savvy audience that isn't necessarily influenced by traditional advertising in the way that other IT providers are able to leverage.
Sun has expanded vertically into the healthcare space with a HIPAA-certified infrastructure as a service cloud. Verizon has successfully entered the government space with their federal cloud edition. And I think they'll be very successful in this space as well. They're early to market into healthcare. They have hybrid cloud deployment models, as well as a lot of security assets that can really help give them a differentiator. Second topic that came out of our research in the quarter that indicated the maturity of the market is really the investment around cloud deployment and cloud enabling data centers in growth markets, so namely America and APAC. Again, when cloud vendors first started selling cloud, they were very much focused on the U.S. and Western Europe. The fact that they're now investing in all these other growth markets, although still representing just a small percentage of the overall cloud revenue, really should, I think, the maturing of the market. The first vendor to highlight is Verizon. So with their Mark acquisition, Verizon could very quickly get more into the Latin American with enabling data centers in both Brazil and Colombia. In quarter 3Q, they began offering the full cloud security portfolio to help drive increased adoption rates, as security remains a top barrier for customers to really get on board with the cloud. Still represents a major IT hub in Latin America, and we believe Verizon will continue to expand operations in the country as really a vital step to entrench itself in the region. So another company that was very targeted at the U.S. and Western Europe. However, with the money raised from their IPO, summer, CEO Frank Slootman announced that the company will be expanding into APAC and Latin America. However, I believe that ServiceNow will face headwinds in expanding into these areas based on lack of trained employees and partner networks in the region. We got based on research done in the U.S. where, again, the ServiceNow, phenomenal company, it's growing extremely quickly, but it's also growing headcount extremely quickly. So there's a gap in terms of experience with some of their employees. Rackspace traditionally targeted the U.S. and the U.K., but has recently expanded into Australia. Rackspace, they did have a hosting, or they do have a hosting presence in Australia from data centers, but demand for onshore cloud was very quickly growing in the country. So Rackspace has expanded its data center operations into Sydney. But currently, they offer private cloud solutions based on VMware. But coming quarters and coming months probably will offer the open stack-based cloud computing, the new rollout of their cloud. Investing across the globe in cloud. And I think the most interesting investment for them, they announced the opening of a smarter data center in Guadalajara, Mexico in the quarter. The $1 million data center is part of IBM's $70 million investment in Mexico, in which it will offer a broad range of cloud computing capabilities to the region. Expanding and opening data centers in growth regions include Google, which just opened its first Latin America data center in Chile, HP, and Fujitsu. Now to our third point. With the maturing of the cloud market, the demand for open standards is really starting to increase. What I wanted to highlight is Rackspace. Although there's around 180 supporters for OpenStack, one of the leading open source sites, Rackspace is the first company that has really taken its entire cloud portfolio and transitioned it off of VM and off of servers onto this OpenStack platform. Now, prior to this, Rackspace, they weren't very differentiated with all the competitors that is to enter the market, and this was a real stake in the ground for them. They wanted to be the OpenStack vendor, and they really, have been doing a great job promoting the OpenStack brand. First vendor to offer partner training around OpenStack, which we believe will increase vendor loyalty. And it's definitely going to be a differentiator for them. Open standards and open source, we don't think it's vital for today, per se, for the cloud, but in coming years, 2, 3, 4 years down the road, we think it'll be a major selling point for many of these companies who support OpenStack. Proprietary vendors, including Oracle, Microsoft, and Amazon, they have very, very large developer bases and customer bases, so they'll continue to be successful. I believe that the open source vendors will attract the new wave of developers and partners and really help drive that cloud business.
Yeah, one of the things when you look at the supporters of OpenStack is that in terms of those cloud developer bases, where's the axis of power? And we believe that Microsoft, Amazon are really two of the leaders there. They, through their strategies, have built up those developer bases in a way that shifts kind of the current access over to the side on the proprietary side. So what offering like OpenStack or platform like OpenStack does is start to level the playing field immediately, but over time, certainly that's the threat for the Microsofts and Amazons, but also part of the opportunity for those vendors that don't have the tie to the developers today. Certainly, a real wide swath of vendors on the left-hand side there. You look at a company like HP, not typically a developer or platform company in the traditional side, but through the port of OpenStack, gets them as part of that broader initiative. One of the things that we look at open source on traditional software, you got a company like IBM. They've been very successful at leveraging open source, and supporting it, but it's always in a way that maps back to tangible business goals and financial results for them. So they're able to leverage the best of open source, but in the end, it ties into their commercial software strategy and generates revenue and profit for them. When we look at OpenStack, I think there's just too many business models to really say a company like Rackspace has clearly identified how they're going to leverage and control OpenStack for their own financial benefit. I think they probably have a number of different models in mind, but none of them, they're really wed to. I think it's more about promoting the overall platform in standard and then figuring out how they can monetize it later on. And I think that's not just for them. For a lot of companies that are participating for it, the business models are still an open-ended question, and that they will, you'll see those firm up over time as, the use cases and the dividing lines for where OpenStack fits and where it doesn't become more firmly drawn, and then the vendors can align strategy around those.
That really wraps up the presentation. Now, who has the first question?
Great. Well, questions come in so far. The first one, Jillian, is around Salesforce. They have a high revenue growth and low profitability, trademarks of earlier cloud companies, high sales and marketing expenses. However, this is an older cloud company. Do you think it's more of a process issue than a portfolio issue?
Yes, I think for Salesforce, it definitely is a mixture of both. Upon public, the company was profitable for a few years, and just in the last probably 6 quarters, we've seen profitability really drop off. I think they spend 50% of their expenses goes into sales and marketing, which is much higher than companies like NetSuite and Workday, who traditionally have invested more in R&D. Salesforce, I think, 7% in R&D. So yes, we do think it's both to expand their portfolio and expand their customer base as quickly as possible, because a lot of vendors are entering the space, so competition, ramped up pretty quickly for them. But we also do think that, this type of model is not sustainable.
Okay, so next question to Ken. Of all the vendors you're covering, which do you see as long-term winners in the space?
So question, because you see in those bar graphs we're covering the 30 largest, but certainly it's a broad market for who's competing in the public cloud space. So going forward, we certainly do see consolidation, but so that'd be among the pure plays. I think the long-term winners are vendors that can either develop a niche specialty in terms of delivering public cloud services, or fit it into the spectrum of all the different options available. Certainly, we see long-term, the more traditional IT vendors, the Oracles, the Microsofts, the IBMs, they will always be there. They will be significant presences in the public cloud space. I think that their models also fit where we see the market going. We just recently completed a private and hybrid cloud options study, and one of the things that hit us as we did that was looking at the overlap between private cloud consideration, implementation of those services, and with eye to getting to hybrid cloud. So already starting to think about how to connect and what public cloud services to connect so that they can make the right sourcing decisions for elements of the different workloads that are being deployed. So I think going forward, and that's where most of the revenue is going to be generated, we think. For those large enterprise customers that are going to use cloud extensively, but it's not all going to be public cloud. It's going to be a mixture delivered in a hybrid way. So companies that can provide that end-to-end cloud package, I think in the end are going to control the market. Now there's going to continue to be pure plays and vendors with niche focuses that will continue to be there. But I think in terms of the control and the ability to, both from a portfolio and go-to-market perspective, have the biggest impact, it's those larger players.
Great question that came in. Historically, market data has suggested that software as a service is the fastest growing cloud service. Will this trend continue, or are as-a-service offerings like testing, big data, etc., going to dilute the fast growth we have seen in the past?
We think that the SaaS growth is already beginning to slow, which is actually another reason that we saw kind of the tipping point, the cloud business model beginning to mature. So the platform as a service market we see is growing the fastest, and that's really, it's by the smallest market to date, but also it's really that sticky layer. So a lot of companies, today customers actually kind of started with software as a service or infrastructure as a service. And customers are understanding the needs or our demand platform as a service. They want to customize their offerings. And vendors too, many more vendors are getting into the platform as a service space. Same with infrastructure as a service. So it's a lot of the server vendors, IBM, HP, Fujitsu, Dell, they all, and as well as hosting vendors, they all care for infrastructure as a service, and they all are beginning to offer it. So we've seen a fast uptick in both those markets.
Yeah.
Sorry, go ahead.
So we see software as a service as the tip of the spear, and that platform we see as the next wave, but really it's about designing that next generation of applications that are going to drive demand for both software as a service and more platform as a service. And then it's about the supporting infrastructure. I think in terms of penetration for public cloud, when you look at the overall market, there's significant growth to be had in those infrastructure portions. I think with the number of vendors providing offerings there and participating, the diversity of flavors and attributes is growing as it has before. So that's where we see, and that's also where we see customer demand shifting. So after they've moved a few applications to the cloud, it's that what can I do next? And so it gave rise to the ServiceNows and those office-focused vendors. So we see continued proliferation there in terms of the revenue and vendors participating below the software as a service layer.
Okay, so it came in. It seems that of cloud adoption, specifically infrastructure as a service, seems to still be limited to niche use cases such as test and development, not enterprise-wide deployments within an organization. Is that a problem for providers?
Absolutely. So I think you have seen some standard use cases. The test and dev is a great example. Really good fit. And I think the thing that expands those use cases is hybrid cloud. So instead of moving an entire workload onto one delivery method, the ability to those things that should remain in-house, use either a cloud or traditional delivery, but do it in a very standard on-premise way, and then put of it into a public cloud where it makes sense, where it fits the requirements, and have the skills and tools in order to manage that process. I think that we see as the major enabling factor for continued growth in terms of infrastructure as a service, public cloud in general, that allows customers to not have to make an either-or decision is really the thing that gets public cloud beyond a kind of a niche implementation, and to be able to use more broadly across the workloads that customers are delivering.
Okay, and if there's any more out in the audience, please send them through now. Given that Google's enterprise cloud offerings are still pretty new and in development, how much of a threat are they right now to some of the more established vendors?
So Google's business portfolio, so Google Apps has been around for quite a while, and it is one of the most adopted business. However, Google really hasn't done all that it can to monetize. Now, we see with the launch of Google Compute Engine, it really seems like they've turned around and they're back to business. They want to focus on their core technology, and they really want to better monetize the space. So in the apps business, they've also killed their free apps, just indicating that they seem more serious about penetrating that market. And I do think that'll be a threat for companies like Microsoft, IBM, and more recently VMware. On the compute side, so their infrastructure as a service offering, the big thing there will really be that Google is really the only vendor that's going to be able to compete with Amazon from a pricing standpoint. Once Google's Compute Engine is fully ramped and in the market, we see as Amazon, yes, is much more mature, but we think that customers are going to now have two choices for, a brand reputable, low infrastructure as a service provider instead of Amazon. So that being said, I think the market is growing quickly enough to have two or any very successful low-cost infrastructure service and low-cost providers. So we're going to take share from Amazon per se, but that they will see success.
Okay, another question coming, two questions actually. Who is best placed for taking advantage of hybrid cloud? Private cloud players or the public cloud players also in the run?
Yeah. So from customer conversations that we've had, for those hybrid cloud decisions and evaluation, customers largely are looking to the private cloud providers and looking at those portions of the portfolio first. So for those, like VMware and Microsoft are top of mind for private cloud. So them having the ability to either have the public cloud offerings themselves or have established partnerships that have proven integration points and have the support there to get those up and running. That's just opportunity for them. It's harder for the public cloud vendors to really be direct about approaching hybrid cloud. Certainly, we do see the opportunity there to go out and seek out partnerships and to do messaging, go to market. But it's a little bit to sell rather than that conversation happening from the private cloud space.
I have an opinion question come through, guys. Do you have any view about CSC?
So CSC is one of the companies that we're adding because of I think from the perspective, their cloud just really warrants more coverage and evaluation. So we're adding to our vendor coverage this year. So from their perspective, I think they're one of the most advanced in terms of publicly messaging and going to market with innovative cloud delivery models. When we look at our private cloud study, we saw really aligning very well with the main barriers to entry and the customer requirements for private cloud and hybrid cloud, coming in with mixed pricing models, which I think is one of the big things that customers are looking for. Pricing that avoid them having to make large capital outlays is something that is very attractive. Certainly, if you can deliver cloud assets in that way, it's something that's very telling from what we've seen where customers want to be in the market. The area where we see guys in general, customers really looking for more kind of proven ability here is helping them build the skills through services to integrate the technology in the right way, to use it in the right way, to really build up that private cloud expertise and then look to transition to hybrid cloud. A lot of the customers we spoke with are still the learning stage of that. They feel like they're on the cutting edge and there's no kind of benchmark in the market from a services perspective that they look to, and it would be valuable for them to engage with that as part of their journey to private and hybrid cloud.
Yeah, and just another note, CSC is building some of its cloud offerings on top of SkyTap in their data centers, which is a super interesting newer company to the market. So I think that could be a differentiator and really a value add for them.
Great. We realize that we've run up against the hour, but we're happy to keep going because we've got a couple more questions in the queue. So if you guys can bear with us, we'll answer the next couple questions that come in. Next one in queue is Microsoft is also a more recent entrant the infrastructure as a service market. You mentioned Google will be the best fit to compete with Amazon. Where does Microsoft fit into the picture?
I think Microsoft will be a lower cost offering. For Microsoft, it's really up to them if they want to drop prices. Amazon is lower margins than Microsoft, so it depends on Microsoft's comfort. I've also seen Microsoft as they went all in with their SaaS business, but with Azure, they've had the technology for a while. They were definitely an early to market vendor with that technology. So I think with infrastructure service, they make a big bang now if they, promote it and really cross-sell it. I think could traction. I think the best route for Microsoft or their attribute is the large partner network. So Amazon and Google do have partner networks, but Microsoft's is definitely that's been in place longer, and they'll be able to penetrate the market pretty quickly if they'd like to. I see them in a different tier though than Google and Amazon.
I think part of it comes down to confusion around messaging. So they've, from their perspective, it's been more about the corporate strategy and then aligning the messaging around that. So you saw this early push with Azure around platform as a service, getting the developer community on board with the shift to cloud services, with the positioning of Azure as also infrastructure as a service last year. I think it takes time to work through. So, what you got to really get customers aligned on what the value is, what the use case. So I think it was starting to resonate with the platform side. It starts the clock again on the infrastructure side, and obviously, they don't have the same type of legacy providing infrastructure as they did on providing development platforms. It's a different market for them, and different competitors certainly than they're used to facing in that space.
Okay. The question we have is how to monetize public cloud for communication service providers. Who is positioned in helping CSP to face this challenge?
Interesting question. We've seen, so that is exactly the question for the providers. Who's going to be the cloud delivery? Is it going to be the infrastructure providers in that space? Can the broader IT providers play in that space? And I think you're going to see a more of a mainstream IT mixture than you see on the traditional IT side, because I think there's less differentiation for telco and service providers. I think companies like IBM have really ramped up in that space and have both the customer base and a growing. It's a different market than the traditional side. The barrier to entry for telco we see as lower in cloud than on the traditional side. So I think that opens up the market more than it had been previously.
Okay, a question we had that came in. Do clients prefer orchestration where a single vendor offers all needed as services, or do clients multi-source cloud needs?
So, the answer so far is that they've multi-sourced. Part of that out of necessity. You don't see a lot of vendors coming to market with a broad portfolio that ties multiple offerings together. From the vendor side, I think they would love for the answer to be single sourcing. It would tie directly to a lot of the initiatives and efforts that we've seen across the spectrum. Some of the areas that Jill highlighted are exactly that, building out the portfolio so that there are fewer providers in the cloud space. For those providers, they're able to generate revenue through multiple offerings. So I think that there is a willingness on the part of customers to, if you think about the pendulum, and we've seen it swing, different times on the traditional side, we do see it swinging more towards the single provider right now. And that's kind of the trend. I think you'll see more consolidation among customer purchasing as they built up adoption across a couple different workloads. At some point it makes sense to take a look and say, can we consolidate vendors from a contracting and a management perspective?
Yeah, I think currently, or the last couple years, a lot of cloud solutions, with public cloud solutions, really have kind of been backdoored in. So certain units could be using Box or Dropbox, or the sales team in Belgium has Salesforce.com. So we see a lot of different cloud vendors among the customers today. But as Allan mentioned, I definitely do see a roll-up. There's been a few roll-ups, one around HR, social enterprise, and a few infrastructure as a service acquisitions, namely SaaS and Dimension Data. So I think from both perspectives, especially the large enterprise space and customers who want to get to that hybrid cloud state, I think they will want to purchase from one vendor. However, there is also a need in the market for the best of breed vendors, so different public cloud stacks. I think those are targeting more of the smaller, nimble organizations.
Okay, I had a couple more questions. I'm going to take a couple more. If we don't get to your question, we will follow up with you individually. We got to get your thoughts on Dell and HP.
My thoughts around Dell and HP, I see them as being large public cloud space, but I do see them as being major in the private hybrid cloud space. A lot of vendors that have assets in place, for example, Dell and HP are perfect, IBM as well. Their ability to offer private hybrid cloud, they do it more cost effectively and just a lot faster than other vendors. So it's very difficult for a public cloud vendor to all of a sudden get into the private cloud space. It would take a lot of investment. And where I see the sweet spot for these two players is really in that private and hybrid space. And also they have the ability to cross-sell these new solutions into their massive customer base that they have. So HP in the enterprise, and today I think Dell has a great play in the mid-market space. Being core players there.
I think Allan wants to jump in just so that we say. The other question you have was also around Dell. They've made a slew of acquisitions lately as a late mover into the cloud space. Do you think they can be a formidable competitor? So if you guys want to combine that into the HP Dell discussion, that would be great.
Yeah, I mean, I think it's difficult for Dell to leverage those acquisitions and in a way that really seamlessly transitions into the cloud space. The purchases that we've seen for public cloud, most times, they are not new areas for the vendors. You look at companies like IBM, Oracle, they're a lot of times acquire complementary cloud assets. In the case of Dell, part of it is just their net new entry into markets, which I think it makes it more difficult for them to ground very quickly in the cloud space. There's many integration points. It just makes for a more difficult road for them to go in terms of having a big impact on cloud, where both in software and the service side, they don't have as big a wealth of expand offerings as some of the vendors that we've seen. And I think in general, I can't really say that for IBM or Oracle that the cloud acquisitions are really hands-on successes and that they have benefits. I think it's more of acquiring the portfolio, building for where the market is going over the longer term. It's just a longer time horizon for evaluating those types of acquisitions.
Great. In the interest of time, we appreciate you guys staying on with us for another 15 minutes. We're going to wrap now. If there's any other questions, we will reach out to you directly to get you those answers. I want to thank Allan and Jillian for their time today and providing the answers, and thanks to all of you, such great questions. You can follow Allan, Jillian, and TBR on Twitter for more breaking information around what's happening in the cloud market. And you can also follow us on SlideShare. I've put the URL here for you guys to be able to download slides from this presentation as well as any of the other ones. I'd like to ask a favor from you all. We are running a short survey on the value of the presentation and the quality of the presenters so we can continue to improve quarter. So if you could take a few seconds just to fill that out as you're leaving, we'd appreciate it. We've enjoyed the interaction today, and we look forward to continuing to talk to you. I'm going to leave the chat function open for another couple of minutes in case there's any last-minute follow-up questions you'd like to ask. Otherwise, we'll see you guys all again next quarter. Have a good afternoon, everyone.
Thank you. Take care.